Hi guys, this is Dan from the Investment ABC, your guide to financial freedom. And in this video, I want to give another update on the stock market and the overall market, since it has been a long time since I have posted a video, and it's just because timely, I don't have too much time left to do these kind of videos, but I'll try to give more frequent updates where I just don't cut and edit the videos anymore. So I will just freestyle, and I will just do some kind of podcast where I just give my opinions on the overall market without doing these editing the videos and stuff like that. So I'm apologizing for the poor quality of the videos, but it's just for me kind of fun, and to give my opinion on the market. So I will just do that without having the intention of increasing my subscriber numbers or whatever, or making money on YouTube. I'll just do it for those people who want to listen and who enjoy these updates. Try to give more frequent updates from now on. So since my last video, I've said that I was thinking that the markets would have a bear market rally, which it did have, but only for a couple of weeks, I think, and the bear market resumed. So I didn't give an update on the resumption of the bear market, but because I just didn't have the time to upload a video. But I wrote that I'm expecting the bear market to resume for my Patreon members. I have I don't know, I think I have 3 Patreon members left, but I'm not because I just don't have the time to continuously increase the Patreon numbers and post too many videos. So I just I just don't have just the time to do it right now. I'll maybe start doing it at a time where I don't have a business or businesses to take care of. So yeah, I was then expecting. I said that I was thinking that the bear market would resume, and that has happened, because I was thinking that the Fed would continue to raise interest rates even further. And I was saying that this bear market is the mother of all bear markets. Even last year, when everyone was saying, hey, we're going to the moon, when everyone was running after AMC or Shiba Coin, and all these retail investors were chasing the next 10x stock or the next crypto coin that would go to the moon. I was warning that this would be really a severe bear market, if not the worst bear market that we have seen so far. It's just because there is so much debt and leverage in the system that has built it up over, I think, 10-15 years, and this debt has reached a point now, I would call it debt saturation, where we just can't keep going without deleveraging. That's the problem. I think this bear market, when it ends, in hindsight, we would call it not the great reset or whatever, but the great deleveraging, because all this leverage in the system has to unwind. And the problem has started because now the Fed, they can't just decrease interest rate anymore at a very easy, because inflation has picked up. And I said once inflation would pick up, the central banks, they don't have a choice but to keep raising interest rates, just because people in this age, they have so much information and they know who to blame. So they would go after the central banks and all these people and hang them. So this is why the central banks, they keep going to break something. And I also said that the central bankers, these are the worst kind of scammers, because what they did is they injected so much money into the system, so much currency into the system, that everyone like had to borrow money and to take risks to because they didn't have any alternatives, and they needed to, if they wanted to go achieve something, they had to take a lot of risk, and they had to borrow money for cheap, and invest somewhere, or build a house, buy a house. So all this speculation had started because of these ultra low interest rates for such a long time. If you keep interest rates so low for like 5 years, 10 years, naturally everyone thinks that this is normal, and these rates would always stay like that. So everyone just like kept borrowing for cheap. Obviously, many people, they didn't believe that interest rates would rise at some time. So now, like it happens, the Fed, just like a drug dealer, gave the drugs to the masses, and now they're pulling the plug. They're increasing their rates at the fastest pace in history, and what that leads to is it's shocking the market. So people who, like, last year borrowed for so cheap and they couldn't afford like a new car or a new mortgage for a house, they can't do that anymore. So the Fed is literally killing the economy. This is the intention, because inflation has picked up also, and one way to decrease inflation is to kill demand. That's the problem, because they can't actually do something about the supply side, because still we have all these supply chain problems, I think also deliberately created by these entities. And like, that's the problem. Like, it's not actually the demand side, it's the supply side that is shrinking. So obviously, if you can't get the materials, because everything is just in time and everything is globalized, if you can't get the parts to build a car or material to build a house, so obviously supply is shrinking and the money supply is staying the same or even increasing. That's obviously creating inflation. So I don't need to be a rocket scientist to grasp that. So this is the reason why inflation really picked up this, and also all these stimulus checks from the governments around the world to battle the virus. This has led to an inflation which is rampant right now. And since the central banks, they can't control the supply side, what they're doing is they will kill demand, or they are about to kill demand. So the problem is, like, why I think this bear market is getting very, very ugly is because they achieve their goal to destroy demand. Yeah, they're achieving that, I'm 100% sure. But at the same time, the supply problems keep intensifying, especially because of China's COVID policy, and also the war in Ukraine, which God knows, like, fitted perfectly for the central banks to divert the blame of this inflation to Russia. So if you want to blame someone, don't blame Russia, but blame central banks for inflation. But obviously the masses, they don't know that, and they are believing that the war is the problem. But the war is just a diversion. So what the war and also like the COVID policy of China is doing right now is still like decreasing supply, and that gives the Fed the room for increasing the rates even further. Because what that happens is that the increase in interest rates, it doesn't have the effect that it would have if the supply side would be stable and not shrinking. So they are killing demand even further and further. And this is why I think they will keep pushing more than most people think, and they have the room to do so, because just like inflation won't come down that easily, it will come down definitely, I'm pretty sure, but I'm not sure how fast it will come down. I don't think it will come that fast down like many people think, because also, like I said, that the supply side is still shrinking or not picking up that much because of these problems. Plus, the all because of all these COVID policies and the stimulus check, there is still a lot of like cash at the in the hands of the consumers. So it takes some time to run out of money for the masses. So if you still have like cash left at the bank, you can still go and buy your groceries. You can still like buy other stuff, and you have to think about it. So if you have the cash sitting somewhere and you can't use it now to buy a car because you don't get a credit, or you can't use it to buy a house because you don't get the credit, you have that cash to go to a vacation, because you say, hey, what am I doing with the money? Inflation is like eating at it, so let's just spend it on whatever I need, a holiday, used computer, used car, whatever I need. I'm just like using it right now. So it just takes time to run that money dry. But I think at some point the money runs out, and the consumer, they don't have too much money left to go and buy the latest gadget, or the go to holidays, or even like buy anything. So it will just hit them like Mike Tyson in the face, because it will most likely come at a time when maybe China is opening up again, and the war in Russia and Ukraine is easing, and suddenly the supply side is going again. But the Fed increased interest rates so much that demand got destroyed a lot, or all demand got killed overall, and the supply side is suddenly picking up again. That would be a recipe for deflation, in my opinion, which we might see sometime of end of 2023, in my opinion, or middle of 2023. I'm not sure, but I'm pretty sure that at some point we will have a period of deflation, and this is the time where the Fed would most likely decrease interest rates aggressively, because something's gonna break. But yeah, this is like the longer term picture. I was saying also that it's the this, like in the last bear market rally, this is not the end of this bear market, but it's just a kind of intermission. And right now, I think we have another intermission where currently we might see another strong bear market rally. From now, I think we are forming some kind of bottom, and we have room to run maybe to January, February of 2023. Maybe we are already like formed the bottom and are trying, or are making the way to maybe around 3,900, 4,000 on the S&P, where we just like might get, or with a high probability get rejected and resume our bear market rally. Because currently, when you think about it, everyone is like bearish. I haven't really hardly seen like so many bears around. If you just look all these YouTube channels who predicted last year, he was so bullish last year. The same channels that I'm following, the cat guy, the uncle Tom, and here all these crazy channels, they're just like so ultra bearish and shorting here, buying puts there. I think that just by looking at the sentiment and the amount of like retail investors buying puts and going short, I think we have a good chance to have to form a temporary short-term bottom, which will drive the price of the S&P back up to 4,000, around 3,900, 4,000, enough to make people believe that the bottom is in. And then and then the economy, I think, will fall off a cliff. I think at that point, I don't think that this earnings season is going to be that bad, just because I said the consumer still has cash left. But and these rate hikes, they just like need like a little bit of time to have its effect on the economy. So I think like sometime early next year, middle of next year, we will see the full impact of these interest rates interest rates increasing. So yeah, it will just take some time. At that time, I think the earnings will get decimated by many companies, especially companies which don't have too like brand recognition or big moats. They, or even like companies with big like amounts of debts, they will get crushed in these earnings recession. I think many companies will go bankrupt just because of these the leveraging that I was mentioning. But right now, I think the sentiment is just too bad. There is a chance that the market is focusing on looking at the earnings and saying, hey, earnings aren't that bad. Maybe we're not going into a recession. And also the Fed might use in the next meeting just increase a little bit, but give a weaker guidance or more dovish guidance. So I think there's good chances that we form some kind of bottom, especially, you never know, because especially like if there is any negotiations between Russia and Ukraine, or we have a milder winter in Europe, and we see that Europe is getting good through the winter. There are a lot of possibilities that could spark a massive short squeeze rally, because anything that is already like negative is like already priced into the market. So a lot of stuff is already priced into the market. So yeah, you could have a black swan event. I don't know, some major bank going bust, but I'm not expecting that right now, to be honest. It might happen sometime in 2023, like I said, when these interest rates are really making its way into the economy. This is the reason why I think there's a good chance that we form a bottom right now, and a temporary bottom, and like surprise these people who are short on stocks, and who are very negative right now on equities. And if we look at the dollar, we can see that the dollar is forming some kind of a top with a bearish divergence, and also the 2-year yield. It looks like it needs to rest a little bit and to just cool off, to maybe resume at a later point its rise. So everything is not going in a straight line to the moon, but everything needs also pullbacks. This is, I think, with the dollar and also the 2-year treasury yields. They need kind of like a pullback, which might give the market the breather it needs also for like a kind of pullback to the upside. So in my opinion, like I said, prepare for a short squeeze or a kind of like bear market rally in the next 1 to 3 weeks maybe, and be also prepared to the other side that it might happen that like a black swan event is hitting and that we will have another waterfall crash. Normally this is like when bear markets end. Bear markets tend to end with capitulation, and we haven't seen a real capitulation right now. We have seen like this gradually salami crashes and slowly grinding down, but we haven't seen these ultimate capitulation, which is typically the sign of a real bottom. So this is the reason why I think the worst is yet to come. So prepare mentally for everything, and I hope you enjoyed this update, and see you in the next one. Bye guys.